All right, so actually, let me close my door. Okay. Cool. So our hunch was right from Tuesday, because if you guys remember, we were around here on Tuesday. Right, our hunch was essentially waiting to see whether we were going to get the bullish invalidation, which is what's going to pretty much dictate the bearish move to the downside based on hitting the POI that we had mentioned before, based on, right, the reaction, the original reaction from the overall POI that we called out, I believe it was like 2 weeks ago now. So a bit interesting, a bit messy, just because internally, right, we didn't actually give the full-on break of structure, meaning we should have created a, from this high, breaking the internal low, making this a solidified high. These continuations from high, low, retracement, continuation, retracement should have continued, right, to take out previous structure points, and that would have solidified the entire move in itself, and we could have now started aiming down here type of thing. But because that didn't happen, because what happened is that we got, right, an H1 reaction. I think that's a H2, H3 POI. Inside of the H3. Part of the H2, the wake of the H2. Because this has generated a reaction, right, short-term bullishness has come into play, meaning, right, from here we obviously came into the internal pullback of, right, the continuation high, low retracement, but that led to, right, an internal solidified point here. This is what's important to note when studying these ranges. That is important. Oops. Because this is showing to me, right, that there is an internal reaction, meaning this is now a solidified high, right? So because that is occurring, there must be something to the left that it's reacting from, which is here, right? So when we have 50% reaction, right, internal break of structure, right, meaning this is a confirmed reaction, a valid POI, this leads into a bullish break of structure, meaning that this is an order flow disruption, right, and a failed reaction to the downside, meaning that if I'm trying to be bearish, I'm sorry, high-low retracement, because the reaction is confirmed, that means that this break of structure, which is now in blue, shows that we are bullish, right? Hence why you can take the continuation here, internal break, invalidation. If you want to take this position, aim for previous liquidity, that is a way to approach an intraday perspective. But we know that we want to be bearish based on what we had originally shown, which was based on the H1 reaction, based on the H4 daily reaction up here, right? So we know that we wanted to be full on bearish, but we weren't given the opportunity to be full on bearish from a perspective of reactions, right? Of course, if I wanted to trade the internal reactions here or here or here, right, that's obviously doable, but I want to see what the reaction is in terms of the overall structure. Like, I want to see that retracement, that discount, or that premium for any bullish or bearish scenario, because that it's what's going to give me, you know, the highest risk to reward. Why? Because internally I know that we have to be bullish, so if I catch the transition, then that's how you get the bigger trade. So dictating a bias now based on that, right? If we go to H2, I believe, yes, it was H2, right? Because this bullish reaction had occurred, this promoted or gave us short-term bullish movement, but it was for the reason of catching the mitigation. Right now, this means that this liquidity is cleared, and this means that this liquidity is cleared, right? Based on that, that is fuel to give us a bigger move to the downside. So based on that, we know, right, that there is an overall liquidity grab based on the POI. That makes us be much more inclined to want to obviously take something to the downside. And how do you read that in the moment? There was actually, I believe this was a news event, was it? Because it was like right at 7:30 when we got that spike on EURUSD. Yes, it was the CPI. So that, right, don't really care what the numbers say, but I care what the reaction is happening, or what reaction is provided for based on obviously that injection of liquidity, meaning that based on an H2POI, we have obviously given now a full break of structure, right? And although we immediately wicked back, right, I'm not too worried about that because it's more so showing its hand. This is showing us, right, that we have a bullish run into a bearish move, right? So as you can see, inefficiency, the inefficiency fill. This is your high probability trade, which is actually something that a couple of you I saw take. Some of you actually caught it earlier than that, which is good. But just based on what I was looking, I believe I saw 2 or 3 of you. Yep, I did see 2 or 3 of you take that. Very nice. So because of that, we have now given a full-on bearish perspective, or a full-on bearish bias, right? Meaning that now we are looking for those continuations, no matter how deep the retracement is, right? No matter what, I know that I'm full-on bearish, which is good because now I have a full-on bias to play on next week, right? Because today's daily closure alone is enough to tell us right now that we have cleared liquidity, we have given every reason to want to take this lower, and this is now pretty much giving us that full-on transition. And because this transition on the daily time frame is actually taking, what is that, like a week and a half? Yeah, from December 1st to December 10th, about 7 trading days ish. That, because this is taking a while, this is actually going to give us a pretty big move. Right now, depending on where that move goes, will actually be determined based on how we react on this low. Right, we're obviously coming down for the liquidity. Now it's just a matter of whether it's going to react based on liquidity, whether it's going to react based on the POI, because internally this leg, you could say, is bullish, right? But we're going to see a bigger move, right? It's just, I don't know what's going to happen as soon as we take liquidity out and as soon as we reach a POI. But if we break through those, then this can melt for all I care. This can melt because we could still assume momentum as a whole is still to the downside, right? And I know we've mentioned this before about how it's conflicting, that we didn't create a new structural range, right? But internally, although this has been overextended in terms of bullishness, right? If we get the proper reaction, if we get the proper breaks, right, there is no reason as to why we can't see another move, another leg to the downside. Right, now I'm not saying this is going to happen, right, but it's very probable, especially if we get the proper reaction here, we don't react from a POI here, and based on where we are reacting from, meaning this is the turbulence point that created one of the final legs to the downside. So very interesting seeing this happen. In terms of AU, I'm sorry. Right, there was a trade that we reviewed on Tuesday, right? And as you can see, this as well is dealing with transitions, seeing what can happen internally with studying internal reactions to provide to you a bias. And just this alone here, right? How we had the confirmed bullish reaction, then a bearish liquidity grab, then a bullish transition after a liquidity grab here. Right, that dictates how this trade can come into play, even with a relatively bigger stop being around a 3.7, which is actually relatively big for AU. So just with that transition alone, you can see where this is at right now. Right, already 1 to 35, which is cool because although we did have something stall out in the week, right, in terms of the bearish break of structure, right, the bearish break of structure led into, right, an inefficiency fill, even the wick of interest here. This wick of interest led into an internal liquidity grab, and from there you got obviously a re-entry technically there. But although this has been choppy, we have seen this now show its hand based on the same news from EU. This is now showing its hand, right? So this should honestly continue much further. GU, this one still I haven't touched this week. It's just super choppy. Not really a big fan of choppy price action, even though it is tradable from these major intraday time frames. Because there's for sure, you could say there's H1POI, H1POI. You can see that those have actually been playing out, but I don't really want to play based on H1POIs and then set my SL based on those H1POIs, because then the RRs are super low in comparison to what I could do EU, AU. But with this one, right, you could say essentially what we're doing now is showing its hand, because up until now, this has been very choppy to the downside. This is the first time we've broken a significant lower high, right? We've already had a confirmed unwillingness. So this is now technically showing us bullishness. So any move to the downside going into a very low momentum would be a very good opportunity for longs. But this is not surprising at all, especially because of all the mitigations that we had covered before, all the mitigations that took for us to barely drive under liquidity. That's 1, 2. This is the low. So 1, 2, 3, 4, 5, 6, right, 7, just to barely sustain ourselves above previous liquidity, right? Very weak order flow. It's also why you can say that this is very choppy, and you could also say that's why I haven't really wanted to trade it. Excuse me. With EU now, right, pretty much what had happened, what we had mentioned on Tuesday is pretty much exactly what had happened, with the fact that this was actually a liquidity grab, and because you see obviously that bullish move up, and because you see this not react to the POI but instead break through it, that is what's pretty much dictating this bullish bias. But it was interesting this week, because I know that you guys caught this as well, right? Because we had actually taken liquidity, and then thanks to the news event from today, right, we have obviously had that sign of optimism after taking liquidity. So this is not in fact a bearish break of structure, it's actually a bullish liquidity grab. And I know a couple of you caught that retracement, which is what's currently running, and that should easily come up into this previous high, which is already in and of itself almost 100 pips, about 90 something. So yeah, when I saw you guys take that, yeah, very good trade, very good trade. I believe it was off of the M5 candle, right? So pretty much take liquidity, right? Obviously you now have a solidified high because you take an internal low that is taken out, solidified high. News causes sign of optimism, which not only takes out preliminary high, but takes out the overall preliminary leg, which is now giving us a sign of bullishness. And this is the trade that you guys are in currently. So about a 5 pip. Already 1 to 10, easily should be 1 to 20-ish. 1 to 16. 1 to 20. Not bad at all. Just will be interesting once we start to actually take out relative equal highs there. I do want to see what happens after that, but honestly, this is looking pretty bullish to me. Looking pretty bullish to me. Yeah, looking pretty bullish to me. Because now, if we actually do in fact break relative equal highs, right, and we do break this overall high here, right, then this is now confirmed unwillingness based on obviously the high up there down to low retracement, unwillingness based on the fact that we would be taking this out. So that would make this full on bullish. Cool. So does anybody have any questions? Do you guys have any studies that you guys want to show for this week? Let's see. I know you guys have been pretty shy about that. But it is good to see this actually play out based on our bias from Tuesday. But yeah, does anybody have any questions? Cool. Anyone? Let's see. You're good. Anybody have any studies they want to show? Or else, I mean, we're gonna have to cut this one early. All right. Any questions from anybody? All right. Cool. Well, let's actually let me actually make something clear too. So, if you guys want me to keep making these Zooms live, like, I'm gonna be honest, you guys need to start bringing me questions. You guys need to start bringing me studies. You guys start bringing me something, because if you guys aren't giving me anything, then I have nothing to work with, right? I get to the point with my biases, with everything that went on this week. I get straight to the point, making these Zooms like 15-20 minutes, right? So if you guys really want me to keep doing these live instead of just pre-recording them, then we need to start bringing studies. We need to start bringing questions. We need to start bringing something, right? Because obviously, technically, if you guys aren't giving questions, it's technically a good thing for me, because obviously majority of what you guys need answered is already answered for you in terms of the videos. But I do want to start seeing more in terms of studies, in terms of just something from the members on the Zooms, because outside of that, this is going to be super repetitive, and I'm pretty sure it has been super repetitive for the past, what, 6, 8, 12 weeks, right? We've been in routine with this for what, a couple months now with the pre-recorded Zoom. So if you guys aren't giving me something to work with, I'm probably just going to start pre-recording them, period. So I'm going to give it like 2-3 weeks. And if you guys can't give me any studies or anything like that, which is 100% cool if you guys don't want to, because obviously I am asking you to put yourself out on the spot. But if not, then I'll probably just start pre-recording these. Yeah, like yeah, we can give it till, honestly, we could even give it to like mid-January, because I know probably in like 2 weeks, I might just take a week off just because the markets might be slow for Christmas. But probably starting around mid to late January, if nothing changes, I would say I'm probably going to start just pre-recording them. Yeah, no, yeah. If you're still in terms of, if you're still in the beginning of the process, don't worry about what I'm saying. Worry about what I'm saying once the time comes. Because right now, your first 6 to 8 weeks, I do want you to, obviously completely, expose yourself to everything that's provided for, because there is, I would say, like 30 to 40 hours worth of content on the website alone, plus Discord. But yeah, keep writing those questions down, and if you can't answer those with your own studies, then obviously once you reach the next phase of the process, then I'll figure it out. But yeah, other than that, are we cool for today's Zoom? Caught gold today, very nice. I believe you posted that. I believe I saw you post it. Yeah, I did. Yeah, you did. Very nice. Cool. Let me see. Let me open something, since you want to talk about that. Yeah, you can go ahead. The only issue is I don't teach closures. Closures is more so something that's pretty intuitive, something you learn over time. But yeah, you can. I mean, and if you have examples with the questions, then that would be perfect. Right, so this is cool. And tape. Obviously, you are bearish, right? High, low, continuation. unwillingness, but technically not unwillingness until this breaks, right? So because this is now unwillingness and unwillingness here, it's now no man's land. But the fact that you had a liquidity grab here is what gave the entire bias away. So I wouldn't say this is what's important. I would say what's important is the fact that that was taken and then that was taken. The liquidity grab model in play. Like, yeah, liquidity grabs, very, very nice. That's how you saw it. Cool. So liquidity grab, if you guys notice, a lot of like my trades recently have been liquidity grabs, if you notice. Because a lot of time, if it's not a liquidity grab and you just have a simple bullish continuation break of structure, you can literally, it would be the same as trying to trade this. You see what I mean? Yeah. But yeah, that's a very nice trade. Very nice. I kept the conservative with invalidation. That was only 5 pip stop. That's not bad at all. For Icar Gold, that's not bad at all. What are we looking at?
Hey, what's up, Fredo?
Yeah, what are we looking at?
So, my question is, can you go to 1 minute? It's more like a doubt, more than a question.
A detail?
Because, yeah, when I saw like obviously like the push with the news, and I then just saw like this movement, like slowly movement. I thought that this deep retrace isn't gonna work, so I didn't take the trade because of that.
So based on what?
Like momentum. I didn't like
No,
this
no, yeah,
momentum.
but what is that based on? It's based on M1.
Yeah.
Right. Do you remember what did you read? Who said that in the was there recognitions? Or was it case? It was case studies. It was Jordan who said something, I believe. And what he said was, what's helped me out a lot is waiting for, and this was literally from December 7th in the case studies section of the Discord. He said, what's helped me out a lot is waiting for disruption or BOS on M5 and up after a PY reaction. Then if I need to, I'll refine to lower time frames for entry. You may still lose, but you will get way more break evens and partials instead of full on losses, which is 100% better. So if you notice, this entire time on today's Zoom, I have not touched M1. This entire Zoom, I have not, unless I'm tripping, but I have not used M1. The entire basis of why this trade made sense was because of the liquidity grab here, right? And then obviously solidified point here, which was taken out, but more importantly, the preliminary leg was taken out based on the liquidity grab. So this is now a sign of optimism, meaning that the structural invalidation for this bearish move, or for this bullish move, I'm sorry, is here. That is the invalidation there. So now whether you want to take based off of reactions is one thing, but if you want to take based off POI, it's another. Because if you want to take the deep retracement, right, you have a very narrow place of entry because your invalidation is right below the candle of interest. So that's worth the limit because this is a very low space in terms of it's either going to react here or it's going to full on break and my bias is incorrect. So this entire time, I know, right, that this is my structural invalidation based on the liquidity grab. So, and I know, right, I've said this countless times before too, is a pullback internally will be bearish. But you want to catch the bearish to bullish transitions for a good long, and you want to catch the bullish to bearish transitions to get a really good short, right? And by that I mean you have a structural range, you obviously have internal bullishness, right? But it's when you catch the transition from bullish to bearish, whether that's a limit on a POI, whether that's a liquidity grab, whether that's an order flow disruption transition, right? Doesn't matter what it is, as long as there's something in place that you catch internally based on the transition, that's how you get your bigger trade. So in this scenario, I know that we are bearish internally, because you have to be bearish internally on a bullish pullback leg, right? Like, as you can see, this right here is bearish order flow. This is a very good hedge position in terms of then wanting to take the bullish long here, because I know if you want to take a hedge per se, or you just want to observe this, right, then I know internally I have to be bearish in order to get into the bullish POI. But now whether I want to wait for the reaction from the bullish POI or just play the POI is completely up to you. So from a reactive standpoint, there was no entry. But from the perspective of wanting to take a POI and, you know, obviously wanting to, you know, just play based on the POI, which is how a lot of people do in the group, right? This is valid because of the narrative in play being the liquidity grab. So I know that if I break this red line here, then I'm wrong, right? But if you're in doubt, just get off of M1. Like, I've said this for months now. Get off of M1. Like, there's no reason for you to be on M1 outside of an entry. But you also can't over refine to where you will miss a trade. Right? Does that make sense?
Yeah, I understand. Thanks.
So would you say that that you're more reactive based than POI based?
No.
Or would you say you take more trades on POI?
Yeah, I take both. Just I have seen like so many times like fake moves with news, and I just sometimes get scared.
But focus less on the news and focus more on what the move is showing you. For example, yes, you could argue that this is a potential liquidity grab, but in order for this to be a liquidity grab, this has to break. Do you get me?
Yeah.
So the only thing I can assume is what is being shown on the chart, which is a bullish break of structure after liquidity, right? And in terms of how important liquidity grabs are, well, like I just said, majority of the trades that I've shown you guys over the past couple weeks have been liquidity grabs, because those have shown me the most security. Okay, cool. Yep.
Yeah,
I wouldn't say it's frustration, bro. It's just when I pre-record a Zoom, it's a whole lot less how do I put this? It's a lot simpler for me to just do the pre-recorded Zoom, and sometimes I could just get it out of the way before New York. But yeah, I would appreciate more participation. Because at the end of the day, that's the entire point of this, you know? The entire point of a Zoom is to review. Why do I just give you the most security? I wouldn't say that's a factual thing. I'm just going off of personal experience. Like, if you guys have noticed, like I said, majority of the trades that I've taken have been liquidity grabs. A lot of the trades that I've shown you guys have been liquidity grabs. Right? Because remember what I said, trade what you see, not what you think you see. Well, what I see is liquidity is being taken and a continuation BOS. That, by definition, is a liquidity grab. Yep. Like, if you guys ever see Raj, right, he's obviously not as active as he used to be. But literally all of Raj's trades have been liquidity grabs. Obviously, they've been derivatives of how he sees a liquidity grab, right? But for example, with him, for months, all he traded was liquidity grabs. But at the end of the day, you just have to trade what you see more often, right? Because somebody could have seen this completely different. Right, somebody could just have seen this as a bearish break of structure, then a bullish break of structure, and then just an order flow continuation. Somebody could have seen it like that. right? I'm only seeing it like this because this is what I like to see. But yeah, liquidity. Yeah, that's definitely the hard part, bro. But I wouldn't, it really just depends on what kind of trade you're trying to look for. For example, if you're just wanting to take limits off POIs, then you have to worry more about, you know, finding a solidified POI, what makes it attractive, what makes it, you know, obviously work, right? Whereas if you're more so reactive, then you focus less on the strength of a POI and you focus more on the strength of a reaction. But it has pros and cons. Because if you're reactive, then a lot of the time you might miss the trade. But if you're pro POI, then, you know, you'll obviously have more executions depending if you're an intraday swinger. But, right, you need to be a lot more confident in your choice of POI. So it has its pros and cons. But yeah, are we cool here, guys? Any more questions? But yeah, I guess we're cool. All right, cool. I'll see you guys on Tuesday.